Hello students, welcome back to episode number 2 on our fixed assets or PPE for varsity level and also for high school level. So let's continue with our activity. You remember, if you have watched the first episode, I did 1.1.1 for the calculations of the vehicle depreciation, and I said we need to continue on the depreciation based on the equipment. Please make sure that you watch the first episode on the fixed assets or PPE before you watch this episode number 2. So let's get started. Here we are on the equipment. As I have indicated before, when you calculate the depreciation on the item, you must first identify the what? The method. Which method are they using? Remember, we have got two methods. We have got the diminishing balance method, which we apply on the vehicle on the first episode. We also have the straight line method. Straight line method can be also called what we call a cost method. So now, we need to determine the method from our question paper. We are doing the same question paper, which is Gauteng Province, June, paper 2, 2024. Go and find that question paper on the internet. And then remember, first of all, you need to know the end and the what? And the beginning. So according to this question paper, they said the end on the 30 April 2024, meaning that they have started when? 1st of May 2023. How do you find the beginning if you have the end? You check the month. If it's April, you check the next month, it's May, and then previous year. I'm sure you are following on that. Except only if you are using January to December. You know, if I end December, I started in January, right? And same apply. December, if it's the end, you check the following month is January, and then you just take the same month because it's on the right sequence. So let's get started here. We are going to read the information so that we can get which method are they using on the equipment item. On the information there, they are indicating that equipment is depreciated at 10% on the cost price, meaning that they are using a cost price what? Method. Cost method. Cost method, as I have indicated, is the same as what? Straight line method. So it's the same thing as straight line method. So what is the formula for straight line method? Is a cost multiplied by percentage multiplied by m over 12. That is the first step, is to find the method. We already know our timeline, the beginning and also the end. And then after you have got the method, you need to read the information in order to find out whether there was an item that was new, which was bought during the year, there was an item that was sold during the year, or there is an item that are remaining, which is their old item. So let's go to our screen there. According to the information there, they are saying that a new equipment was purchased halfway through the financial for 90,000. This transaction was not yet recorded. New equipment, meaning that in our equipment now, you need to indicate down that I have got the what? The new item. Are we all together? And then they also indicated that any equipment was sold. No equipment that was sold, meaning that obviously I always say that it can't be that you don't have old. Old is in most cases is always there. So we have got a new, we have got old items. These are our items that we have. So let's start with the new to calculate the depreciation. We are given that how much was costing this equipment. They said that it's how much? 90,000. Then you multiply 90,000 by what? By percentages. Let's find out the percentage on the screen. The percentage, they are saying that equipment is depreciated at 10% per annum on the cost price what? Method. Meaning that they're using 10% on the equipment. Multiply by 10% over 100. And then we come to the M. You remember I said when you find the M on the first episode of the vehicle, the depreciation, I said to find M for new, you need to know the day you purchase it, and then you count going towards your end, towards your reporting date, right? And then they said they've purchased this halfway to the financial year. Meaning that if they say halfway, meaning that you know that what is the half of 12 months? Is 6 months. Meaning that this one was clear because they say halfway to the financial year, meaning that it was bought I mean, not 12, sorry, 6. So meaning that is half. You have to determine the half of 12 here and then go into the what? Go into the end. So it was purchased and then we use it for 6 months in this financial year. And then let's indicate the answer. In my calculations, I'm getting what we call 4.5. So do the calculations also and you see if you are getting the same with me. And then this was the new one. This was the new one. And then we come to the old. The old, when you're using the straight line method, is not difficult because the old, in most cases on the straight line, you just care about the cost. Unlike on the diminishing where you care about also by the carry value. So now, here we don't have a sold one. And this one, according to the information there, they said it was not recorded. Meaning that on the trial balance, it was not added as supposed to be added. And we don't have the sold one. Meaning that the cost in our trial balance of the equipment is the cost for the old equipments. So let's look at our screen there. The cost is 480,000. 480,000. We have got the 480,000. And then if you have to calculate, look at this information, meaning that we are going to say 480,000 multiplied by 10 over 100 multiplied by 12 over 12. Let's get the answer on that. Let's get the answer. If you get the answer on this old one, you are going to get what we call 48,000. Are we all together? You are going to get the 48,000, which is the depreciation for the current year. But when we check, this one is the current depreciation. When we check the old accumulated given, let's check in our trial balance. It's how much? It's 438. 438,000. And if we combine the two, right? If we combine the beginning accumulated together with the current depreciation, it's gonna give us a cost of 486,000. And we all together, I want you to see something here. I calculated as usual as I have to calculate, and then I got 48,000. When I check the old accumulated, which is 438 from the trial balance, and I add together with the depreciation that I calculated, the total at the end of this, the total at the end, the accumulated is gonna give me 486,000. And when I compare this 486,000, it's now exceeding the cost. Are we all together? So now if it's exceeding the cost, it means that we must change the way of calculating the depreciation. I want you to follow on that. If when you combine the current depreciation together with the accumulated at the beginning, when you find that accumulated at the end that is bigger than the cost, you must change the way of calculating the depreciation. That's where we apply 1 rand method. I'm sure you have heard about that. So meaning that we are no longer going to calculate in this way, because when we check at the end of the year, the accumulated at the end will exceed the cost, which is not good. Meaning that once you see this situation, students, I repeat, once you see this situation, you need to apply 1 rand what? Method. Meaning that to find the depreciation on this old vehicle, you must apply 1 rand method on the carrying value. All together. So what is our carrying value? We must go and look for carrying value. 480,000 minus what? What is the accumulated? 438,000. The carrying value will be 42,000. Are we all together? Meaning that to get the depreciation in this instance, you just minus 1 rand. The depreciation for this year will give us 41,99.99. 999. Yeah, 999. So this is the depreciation for these items. What have you learned? The issue of considering the depreciation when the accumulated at the end exceed the what? the cost at the end. So mean that we must change the way we calculate the depreciation and we apply that. Sorry for that. Sorry for that. So sorry for that. Sorry for that. So it means that you must just minus 1 rand from the what? From its current value. So all the time, if they are not selling it, we'll be minusing 1 rand each and every time. 1 rand, 1 rand, 1 rand. So this is the equipment depreciation, which we're using the straight line method. So let's combine this and this to get the total, because this information is going to help us when we go to the disposal, when we go to the note. We're going also to do the note. What is the total when we add? It's going to be 46,499. 46,499. This was the episode number 2 on how to find the depreciation on equipment. Let us see each other on the 3rd episode when I do the assets disposal, and also when I do the note, which is the tangible assets note, which is in high school, I think it's not number 3, but varsity is not number 5. So you will see how we prepare such. So see you on the next episode. Make sure that you watch the first episode before you watch this second episode so that you can have the logic. Thank you very much. Don't forget to subscribe, share, like, and also turn on the notification bell. Love you so much. Salute.